Hi everyone, and welcome back to Grant Thornton's series of Q&A videos intended to help guide businesses through the COVID-19 pandemic. Business is dealing with a set of circumstances that none of us could have anticipated even a short period of time ago, and the speed with which all of us have had to develop contingency plans and make critical decisions is unparalleled. Our objective simply is to help however we can. My name is Jim Copeland. I'm the Chief Operating Officer of Grant Thornton LLP, and I'm joined today by Jonathan Krieger, a partner in our advisory practice and the national leader of our restructuring team. So welcome, John.
Thanks, Jim.
John, as COVID-19 continues to cause significant disruptions, and we've seen these economically and socially, many businesses are facing some really tough decisions. And in some cases, some of these are even being mandated by government to do things like temporarily close their doors. And while the current situation can seem a bit overwhelming for most businesses, there are steps that business can take to manage the short-term negative impacts of substantial changes in cash flow to both their business and their employees. So from your perspective, what practical steps can businesses take to navigate this crisis?
Jim, there's a number of things businesses can do. The first piece of advice I would give is not to panic. Business owners have to think rationally, but also work quickly in terms of getting a handle on their cash flow. As most businesses who have to close realize very quickly, there's no revenue coming in, but the expenses are still there, the liabilities are still there. So what a business should do is consider what are its fixed and variable costs and determine over the next period of time what its cash burn is. So the cash burn is how much cash is going out versus how much cash is coming in. So in the scenario that you had described, you had indicated a business that had to close, temporary closure, let's say it's for a period of 2 weeks. In that scenario, there's no revenue coming in, yet the expenses are still there. So I'll give you an example, a simple example of a business that we've seen over the last little while. It's a restaurant where they've been mandated to close for a couple of weeks. They don't have any takeout business, so they essentially have zero revenue. But they have all of their expenses in place. So the first, employees, a very significant expense of a business. While employers want to do the right thing and support their employees, some businesses just can't in certain circumstances, particularly one that has very tight cash flow and one where they don't have any revenue coming in. So while this doesn't apply to all businesses, some businesses have bespoke agreements with their employees, but in this particular case, they were able to do a temporary layoff of their employees, which preserved a significant amount of cash flow. The second is around its banking and finance. So companies very quickly have to get a handle on their cash flow situation and present that to their banker. We suggest that companies are forthcoming and have open dialogue with their lenders to explain the situation and the impact that this crisis has had. In the case that we saw that I was describing earlier, the business owner spoke to their bank and they were quite willing to provide some flexibility in terms of payment timelines and also to provide, in this case, a bulge on its operating line. And again, that won't apply to all businesses, but typically if you've had a good relationship with your lender, they're going to be cooperative and try to help you as best as they can. Next, Jim, is around the leases. And that is one expense that businesses have that is significant is their lease. And when it comes to leases, obviously the landlords have to get paid, but we've seen instances in this particular case that the landlord was prepared to be flexible. And by flexible, they provided a couple of weeks where they allowed some time for the company to figure out its cash flow and perhaps come through with some payments. The other thing that we've actually seen, which is another approach, is that landlords in some cases have allowed their tenants to use the last month's rent or security deposits to satisfy the current rent obligations just to free up some cash flow. And then lastly, the government has come through with quite extensive incentives and other things that they're helping businesses keep the cash in the system. And there's probably more to come. But businesses have been able to avail themselves very quickly of the provisions that the government has put forward that has allowed them to keep cash in the system.
So what are maybe the top 2 or 3 concerns that you've heard from clients about cash flow in particular. I mean, you talked about one being the loss of revenue, obviously. That's a pretty big one. What other issues have you heard?
I've spoken to dozens of clients, Jim, over the past week, and I think that the biggest concern that people have right now is the unknown of the duration of how long this is going to go on. I think that businesses can adapt relatively quickly, even in tough times like this, and as I had suggested, map out a cash flow where they can figure out what their cash burn is over a period of time. But that analysis becomes harder and harder as time goes on. To map it out for 2 weeks, many businesses will be able to survive, or 3 weeks or 4 weeks. But again, it's just the unknown of how long this current environment is going to last and what the impact of that is on the company and the business going forward. The second thing that I would say is quite common that people are bringing up is that most people want to do the right thing and pay their employees and keep their employees in place. But some businesses just can't do that. They just have no cash flow or limited access to resources in order to do that. So fortunately, there's the opportunity to allow their employees to avail themselves of employment insurance. While not the best alternative available, it is a backstop for when they can't do it themselves.
John, one of the concerns that I've heard expressed by many smaller businesses is what happens if we're forced to close for an extended period of time. And the concern they express is, will we in fact have to permanently close our doors? I guess the question I'd have is what assurances, what guidance can you provide to those businesses under these circumstances?
Well, Jim, I think that it's fair to say that we should never underestimate the power of the entrepreneurial mind. Business owners are flexible, they're creative, they're quick thinking, and they adapt very quickly to situations that are maybe uncomfortable. And this is no exception. In the current circumstances, there are a lot of businesses that operate on very, very tight margins. And even in the best of times, they've been having challenges to meet their cash flow requirements. As I said earlier, businesses have to figure out what their cash burn is, what their cash requirements are, and in fact, even do a sensitivity analysis to understand what the impact of an extended delay is on their business. We talked about a scenario where a business might have to close for 2 or 3 weeks. Many businesses can weather the storm longer than that, once they determine what resources are available to them, what government programs are available, and also what flexibility their lenders will have going forward. So there are options available for businesses, and it just requires, as I said, rational thinking and but quick thinking.
I would tend to agree that I think the lessons learned through this crisis are going to position businesses to be much stronger coming out of it. Maybe one last question, and in response to COVID-19, we've heard a little bit about various credit options that might be available to Canadian business. Can you maybe expand on that just a little bit? I know there's probably a broad range of options, but maybe just touch on a few of them.
Okay, so just a few things that are out there now is that BDC has come forward with what's called the Business Credit Availability Program. That is a program that they put in place for working capital loans up to $2 million with flexible terms and deferred payment depending on the circumstances. That is an option that is available to any company that meets the criteria of what BDC has put forward. The other thing, as I said before, is that the big 6 banks have all indicated their willingness to help their borrowers, to help their clients through tough times. They have done it many times before, and as I said, I have no doubt that they'll continue to do that again. If you had a good relationship with your lender before this started, chances are that your lender will continue to support you and help you through this process going forward.
John, thank you very much. That was great.
Thank you, Jim.
And thanks for the insights, and to our viewers, thanks for joining us. Just another reminder to visit our COVID-19 hub on our website at www.grantthornton.ca. Certainly follow us on social media for the latest updates. And above everything else, please be safe.